Hello everyone, I'm Chinyan, investment consultant from iFAST. Here is iFAST quick take on the Russian-Ukraine crisis. Markets have experienced a turbulent session in the last week of February 2022. Russian equities plunged negative 33% in just one day. It is also the fifth worst one-day plunge in equity market history. At the same time, the Russian currency ruble depreciated significantly against the US dollar as much as negative 25%. Meanwhile, oil prices surged above $100 a barrel for the first time since 2004. Why is there a war? The roots of current crisis grew from the breakup of the Soviet Union in the early 1990s. Back then, US and its Western allies promised the Soviet Union during negotiations that they would not allow the military alliance, NATO, to expand its memberships towards the east of the Cold War border. However, the NATO has continued to expand its membership eastward since the end of the Cold War. This has rattled the nerve of Russians, prompting them to take military action to retaliate a series of actions from Western countries within the Eastern Europe. This is not the first time to see this kind of geopolitical tension in this particular region. Back in 2014, Russia invaded and annexed Crimea, a mainly Russian-speaking region of Ukraine. Since then, another two Russian-backed separatist regions in Ukraine, Luhansk and Donetsk, have been fighting Ukrainians' regular forces. The recent political development in Ukraine, particularly the 2019 election of Ukrainian President Zelensky, has escalated the tension. Under the continuous Russian pressure, Ukraine has turned to the West for help, talking openly about wanting to join the NATO and European Unions. After many rounds of diplomatic talks, both Russia and Western countries have been in a stalemate on their stance on Ukraine's application into NATO and EU. Following the intensified geopolitical tension, Russia moved to officially recognize the Luhansk and Donetsk as independent states on 21st February 2022, further escalated the whole situation. On 24 February 2022, President Putin launched what he called a special military operation and invaded the major cities in Ukraine until now. With this, markets around this world have seen sharp declines as investors pull out to safe haven like bond markets and commodity, as they foresee this could lead to a series of disastrous consequences. That is why you are seeing a sea of red as global investors are fearful. So how other countries react? To condemn Russia's invasion, Western countries have imposed some largest ever economic and financial sanctions against Russia. Number one, global countries have banned certain Russian banks from the global payment system SWIFT to cut the Russian banks off the international payment grid to limit the Russian government's funding ability. Number two, US and its allies have imposed sanctions to prevent exports of technology to limit Russia's ability to advance its military and aerospace sector. Number three, Germany also halted certification of the Nord Stream 2 gas pipeline despite having more than 50% gas dependence on Russia, regardless of the consequences of sending natural gas price to the sky, or even potential heavy financial losses within mega energy giants. So why is everyone so fearful? Well, we already know that this year of 2022 is going to be a challenging year for investors as the US Federal Reserve is looking to increase its interest rate aggressively this year. Like the market hasn't had enough of issues to worry about. With this Russian-Ukraine war, investors are now so fearful about number one, inflation. The economic sanctions against Russia are likely to result in some supply disruption and send the oil and natural gas prices higher as Russia is the key exporter for this commodity. Number 2, US Federal Reserve to hike more aggressively to fight inflation. In order to tame the skyrocketing inflation, the US Federal Reserve might have to tighten the monetary policy more aggressively, which translated into more rate hikes this year. Number 3, recession. Market is also concerned about the policy mistake should the Federal Reserve undermine the economic recovery and raise rates too early. This might result in stagnant economic growth or even translate into recession. Number 4, nuclear war. Given the Russia's strong military power, particularly with the largest stockpiles of nuclear weapons in the world, investors are worrying about the disastrous consequences should the conflict turn into a full-blown war. So should we stop investing? In iFAST, we still advocate to stay invested in the market, and this crisis does not change our market positioning drastically due to two main reasons. Number 1, NATO has confirmed that they will not be sending any troops to the region to avoid turning this regional conflict into a global conflict. Number 2, despite the wide sanctions being imposed against Russia, but global countries are avoiding sanctions on the Russian energy sectors due to their high reliance. This crisis does not fundamentally change our investment playbook in 2022. Any market correction due to the war fear could present as a good opportunity for long-term investors to accumulate global equities as the global economic fundamentals remain intact or even unchanged. So remember, market reward long-term investors who are able to look past short-term noises. Thank you for watching and stay invested.